Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit HomeGain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to HomeGain.com. Welcome back, Washington, D.C. Metro to Real Estate 360 Live. I'm your host, Ryan Sloper, joined today by my guest, Louis Cammarosano, the general manager of HomeGain. Quick reminder, the show is dedicated and designed to build the Washington, D.C. Metro's housing and credit markets one house at a time. If you ever have any questions, concerns, or real estate needs, the best number to reach out to us is the off-air phone number. It's 877-245-2030. That's 877-245-2030. And remember, that's the off-air phone number, so if you call, just leave your name and contact information. We get back to you as soon as possible. And if you don't want to call in, visit us via the web at realestate360live.com. That's realestate360live.com. Now it's time for this week's Market Movers. This segment was brought to you by HomeGain. HomeGain is the place to get you started buying or selling a home, finding a realtor, and getting real estate questions answered. So go to homegain.com today to see what I'm talking about. All you have to do is type in your home's address, and you'll get an instant free estimate of your home's value online. It's a great way to monitor your home's value, and it's totally free. So check that out today at homegain.com. So this week, like I said, there's not a lot of data to necessarily think about. We do have the July existing and new home sales, along with the minutes from the last Fed meeting, which are basically going to be the highlights of that meeting. As I stated in the previous segment, there's still a bearish market for interest rates out there right now. There's more room for them to get worse than there is for them to get better. So if you guys are fence sitters right now, really think that, tell yourself that it's the prudent, smart move to take advantage of low rates. Don't let them inch higher on you just because, you're fixated with a certain number in your head. I mean, too many people I see lose an eighth or a quarter just because. And, you could be waiting for months and months.
I have a question for you, Ron.
Sure.
If and when, we know they will, when the Fed does QE3,
yep.
Obviously they will be buying probably the treasury securities, which would keep the interest rates down. But I would imagine that some of the countries that purchase treasury securities, like U.S. treasuries, like Japan and China, more so China, because I think Japan is kind of in alignment with whatever the U.S. does, might just decide enough is enough, and they're not going to buy any more.
Yeah.
And that could force rates to go higher. I know that's counterintuitive to what they're trying to do, but once it becomes apparent that the Fed is on this inexorable quest to keep doing or just doing QEs every time they need to, eventually investors will realize that that's just debasing and devaluing the dollar because obviously they just print up the money out of thin air in order to buy them, which just puts more money into circulation, which is the definition of inflation. You have an increase in the expansion of credit and the money supply.
Yeah.
So what do you think will happen if the U.S. engages in another large-scale asset purchase and monetizes the debt?
At this point, I feel like, and we've talked about this numerous times, I feel like interest rates, they're not going to push lower. The banks are, they want to keep them low because it makes everybody feel all warm and fuzzy that interest rates are so low. They're not going to.
I'm asking, Ryan, though, what do you think that the market reaction will be, or it'll just be that the U.S. government, the Fed is the purchaser of all Treasury securities, so we don't really care who buys them. What I'm asking is, I know the Fed wants to keep rates low.
Yep.
Is there a point where the financial markets and the other sovereigns realize that purchasing and continuing to purchase U.S. securities and get paid basically nothing is a sucker's bet, and they're not going to buy them unless interest rates go up?
Yeah, I definitely can see that happening. I can actually see that happening right after this election, which is why I strongly encourage people to really take advantage of stuff before. Because I believe it's a German election year for them as well, right? And I can see that they're trying to keep that euro intact before this election. I can see that collapsing after that election. I can see our currency and markets collapsing after our election that we have here in November. I'm glad you actually brought that up, Lewis, because actually I was reading that even though interest rates have increased over the last couple of weeks, banks are buying huge amount of treasuries and agency debt, which is actually interesting because it almost seems like there's some sort of backroom deal again here with between the banks and the Fed.
Well, they've been given money, and now they have to park it back into treasuries.
It's the gap between U.S. bank deposits and loans is growing at the fastest pace in 2 years. So it's providing lenders with more funds to buy bonds and temper the biggest sell-off in treasuries since 2010. Banks already this year have bought $136.4 billion in treasury and government agency debt, which is more than double than the $62.6 billion in all of 2011. So I don't know what's going on, Lewis, but obviously I feel like, it's like the whole world's in cahoots at this point. It just happens to be that the U.S. is the reserve currency, and I just feel like it's just going to take one thing, and I have a feeling it's going to be the Euro mess, and everything is going to come unraveled.
That's what we predicted at the beginning of the year. If you go back to one of our early broadcasts in the first week of January.
Yep. So, my fear is, regardless of what they do with the QE, I mean, because you see how Wall Street responds to when the Fed says that. It's like, oh, great, the Fed's here to backstop us again. And ultimately, does it do anything? Is it spurring any mass?
Well, Wall Street, you're right, but that's the equity markets, because then they realize that, great, interest rates are low, I might as well put the money in the stock market. That's the old Greenspan put.
Yep.
But really, what happens when institutional investors and other sovereigns decide, wait a minute, I'm not getting the U.S. has a deficit over $15 million and unfunded liabilities in the $1 trillion, in the hundreds of trillions of dollars. The United States can't pay it back. I'm taking on too much risk here because I know the way they're going to pay me back is they'll pay me back, but the way they'll do it is they'll just keep printing money to pay me, which means I won't really get my money back. In a sense, that's a default by printing up extra money.
Yeah, it wouldn't surprise me if they all...
Which would in turn, make the demand for those treasuries lower, and the only way you can get the demand back up is to raise interest rates. And then when you raise interest rates, it becomes even more self-fulfilling because now the U.S. really can't pay it back because it can't afford the higher interest rate payments.
Yeah, and that I can see that happening.
Excuse me, but Ryan, if you take that now and say, what does that mean to real estate? Well, now you've missed the boat on interest rates. Interest rates are going to go up, and inflation will follow from that, and rents are going to go up. But if you lock yourself in today into that low interest rate, at least you've covered that expense for 30 years.
Yeah, and so a lot of people out there that are like, I really feel like, home prices are going to come back down. So let's just say Armageddon happens. We have almost a complete financial disaster after these elections, and home prices start to slide, interest rates go up. So then what happens is you can now get your home cheaper, but your interest rate might be double what it is now. So in essence, it's putting you in a worse position. And you can actually take advantage of it right now and prevent that from happening.
When you have a financial crisis, reactive moves are generally the wrong ones.
Yep. And I really...
The best ones are the ones you take in preparation.
Yeah, and I really feel like, obviously your largest expense for most people is your housing expense. So if inflation, it's going to set in. It's just a matter of, when. It's going to be food, it's going to be energy, it's going to be housing, it's going to be everything.
Well, you've seen all those already.
Yeah, but I feel like it's just kind of minor increases that we've seen in that, Lewis. Wouldn't you agree? I mean, I could literally see, gas overnight doubling. And
in the late 70s, you had stagflation, you had inflation running in the double digits. And the economy, the fundamentals of the macroeconomics back then were not as bad as they are now.
Yeah, I wish I had more of a positive outlook on the economy. I really wish I did, but I just don't see enough, any sort of real growth. It's all manipulated. The Fed keeping interest rates this low for an extended period of time is very bad for the overall economy.
Right. We haven't restructured the economy since 2008. All we've done is injected more free money into the system to keep it going.
Yeah, and so...
We have not allowed, and by definition, when you bail out companies and you put them on life support like they've done with the banks, you're basically rewarding companies that weren't run properly. And normally what should happen is those companies go out of business, new capital gets allocated towards better-run companies, and the economy gets back on its feet. All we've done is we've tried to pump up GM, we try to pump up the banks, we try to pump up the entire economy, by printing up money. And again, if that were the answer, Zimbabwe would be the leading economic power in the world because they went to the printing press and printed, now they have $1 trillion notes in Zimbabwe.
And what's so comical about all that, Lewis, is that the whole time they're saying that, we're doing what's in the best interest of the taxpayers. And, we want to make sure that everything, all these programs that are created and propping up these companies, that the taxpayers not only see their money back, but they receive some benefits from it. Yeah, well, what are those benefits?
The GM stock is still worth less than what they paid for it.
Yep.
Solyndra, they threw that money out the window. That's worthless. I mean, basically, the government is not the best allocator and should not be the one who allocates where money goes for two reasons. One, they don't know how to do it. And two, it just ends up a game of cronyism.
Yeah.
Who's to say that one company gets it and another company doesn't get it?
Yeah, I totally agree. I mean, like I said, I can't, stress this enough, guys, that if you're in a position and you're currently renting and you plan on living in the same, area and you can afford, keyword here is afford your monthly mortgage payment. You don't want to buy above your means. I'm not asking you to do that. But if you plan on living here for an extended period of time, buying a home, and you might say, well, Ryan, I don't have any money for a down payment right now. Okay, well, I'm going to answer. Depends on what state you live in, but we need to look in to see what first-time homebuyer programs there are. There's some that will actually give you that down payment as a gift. That as long as you stay there for an extended period of time, you don't have to pay it back. You can also get gifts from relatives with an FHA loan. If you're a veteran, that's 100% financing. So I don't want to just hear from people that, hey, I don't have the money right now. You need to plan, and sometimes it could be a 30 to 60-day window, and all of a sudden you could be pre-qualified to buy a home. So, I would say don't necessarily, count yourself out just because you think that you can't qualify. You need to reach out to a professional that can analyze your situation and at least put you on, some sort of a fast track to home ownership. I'd be glad to help. It's 877-245-2030. That's 877-245-2030. When we come back, we're going to jump into HUD selling their 9,000-plus discounted loans, as well as a preview of the HomeGain 2012 FSBO versus Realtor survey when we come back. Stay right there.